Morning and welcome to the morning market review. My name is Russell Shaw. It's Thursday, it's the 14th of December, and I'm a senior market specialist at FXCM. My email address is rshaw@fxcm.com. I'm going to go ahead and bring up our risk investment warning. I'll keep this on screen for a few moments. Hey Raj, good morning to you. Nice to have you on the webinar. I'm just going to go ahead and bring up our market commentaries disclaimer. All right, our references MarketScope 2.0 and TradingView.com. So let's go ahead and bring up TradingView and take a look at the real rate. So there was a surprise last night. I felt it was a surprise. The Federal Reserve came in much more dovish than I expected. It didn't really defend that narrative higher for longer. It actually the dot plot suggested that there were going to be rate cuts, and they moved their median rate cut from 5.1 through to 4.6 by the end of 2024. And you can see here that's down in the real rate. So that's very, very interesting, isn't it? Hey James, good morning to you and welcome. This actually gives us our reference candle reversal. Okay, if we put in our arrow, there's the reference candle, and then we looked at today's low, and then yesterday really just took it out. So you can see that it's broken down. Okay, and here's our sort of head and shoulders. To be quite honest, the head and shoulders, I'm not sure if it's valid, but doesn't matter. Doesn't matter. We've got quite a complex right shoulder, so I'm not sure if it would be sort of a downward sloping head and shoulders. But if somebody's not comfortable with that, take terms of peak and trough analysis, and you can see we'll have the downtrend there. So we kind of get to the same we get to the same conclusions, right? Yeah. And Raj is saying the analysis is coming to fruition. So yeah, but we want to watch. Okay, we want to watch also the economic data. The rates are coming down super fast, and I just want to make sure that that's not suggesting something more sinister, as such as a slowdown. Right now, it's very much revolving around inflation and the moderation of inflation. And what we can do here is let's take a look at the real rate versus the US dollar. Let's take a look at the US dollar now. I'm just going to go ahead and bring that up. And we'll use the FXCM basket. Let's just put it as a new pane. And we had a big sell down after the announcement yesterday. And what we can do here is just put in correlation coefficient as well. I think it's useful. So we'll go ahead and we'll do that correlation coefficient just to see how the two measure against one another. So just go through to your indicators and type in correlation coefficient. Okay, and then what we want to do is we want to just put the US dollar. So we just want to make sure we're putting in the right instrument. Click apply. Okay, and it's 2%. If you go through to the weekly, it will be a lot more clear. It's 3%. So you can see on the weekly chart, let's just clear out the drawing here. Take a look at this. You've got a up movement there. You've got an up movement there. Let's put in our vertical. Okay, and here it's coming down. Okay. There's a strong correlation. Admittedly, I actually thought that the Fed was going to defend it higher for longer narrative. Nope, the paradigm shifted. It's been a paradigm shift here. Okay, so hopefully that makes things easier for us as traders. Let's go through and just let's put in Nasdaq and S&P, just do a similar type of analysis. So let's take out the US dollar. Let's put in SPX 500 just to get an idea of how the risk market's looking. And let's put in the correlation coefficient, make sure that that's got the, we're pointing to the right instrument here as well. Okay. All right, so we've got a 65% inverted correlation, so they're pretty tight here. You can see as the real interest rate went up, so the S&P came down, and now we've got the reverse. Let's put in our vertical. Here it is. So kind of there, right? So, and let's just lastly take a look. Let's take a look at two more. Let's take a look at Nasdaq. Let's take a look at gold. Let's just put in Nasdaq. There we go. Okay. So I'll just put in Nasdaq 100, and that's interesting. It's not quite as correlated. I would have expected it to be higher, having a higher correlation than this. Nevertheless, it's sort of here where it's now showing as the real rate increases, the Nasdaq came down, and then as the real rates come down, Nasdaq has pushed up. So what we're trying to say here is that the real rates are one of the key drivers of the market. Another key driver would be artificial intelligence. The artificial intelligence story is still a very strong driver of markets. We're kind of having that technology shift as well. But by and large, the real rate is relaxing somewhat. And that is something that we're going to pay attention to. We're going to take a look at gold, the gold correlation as well. I'm very interested to see how gold has reacted following the FOMC. The FOMC announcement, okay, and let's put in the correlation coefficient of gold here. Okay, it's actually saying that there's no correlation. That's odd. Okay, that's odd. All right. Let's do a top-down analysis. We'll start with the US dollar, and we'll broaden out from there. For that, we're going to go through to MarketScope, and we'll do the analysis on MarketScope. And what we can see here is that the dollar's now fallen out of zone 2 into zone 3. Okay, take a look. We put our uptrend as a marker to measure the momentum, look how crossed the line to the downside. So now we've got the shift down. So this is the daily chart. I'm going to come back to the daily chart. Just go to the weekly chart, see how it's behaving relative to our moving average, and that moving average acting as return down. Okay, so as long as it's below the 30-week exponential moving average and the 30-week exponential moving average is pointing down, okay, there's some weakness. And then we've actually got the RSI now turning back below 50. So it does look as if there is weakness starting to seep into US dollar. And let's go through to this chart here. And what we can do is we can put in our peaks and troughs. Yeah, let's put in our peaks and troughs here. And we've got a peak trough. I'm just going to use these as my references. Okay, and then we've got the lower peak, the lower trough. So this is the orderly descent of the dollar, the downtrend, so to speak. So here's the next lower peak, the next lower trough. So it's a very ordered type of descent. Here's the next lower peak. Here's the next lower trough, and then it gets quite disordered. Just this part over here becomes disordered. I think the way that we can perhaps look at this is as a pattern, some sort of wedge or flag. Let's see if we can kind of get this in as, and then it would be corrective in nature, right? So let's see if we can get this. Yeah, so some kind of flag pattern. Okay. Oh, I just need to do this. There we go. A little. There we go. That's fine. And then this sort of disorganized part of the chart, potentially a pattern. Then we could carry on with the labeling, right? Then we've got the lower peak, and then the order returns to it. Lower trough. Okay. So you can see that the dollar now has resumed this order. That's good news. That's good news for us as traders. Okay. So if the dollar has resumed, we've got a bit of a kick up here. You can see there's a bit of a buying tail. Let's go through to the hourly. We can start looking at resistance levels. So something like this: 1, 2, 2, 3. So it's quite extended now. So I wouldn't be surprised to see some sort of support off of S1, but then we treat that as a rally in a downtrend, and just look for the triggers for the EMAs and the stochastic to trigger those. But you can see here is the big movement down, the big surprise from the FOMC carried down, and now I don't know where this is going to end. Okay, but I think that the S1's acting as support, and then we can start looking for the rally in the downtrend. Let's take a look at a few of the other pairs. Let's just take a look at Euro. Now, ECB and Bank of England today. Okay, so be very cautious when you're trading Euro and cable, because there are central bank announcements around that. And you that the Euro really just on the Fed. I would say some sort of pullback. Let's say then Christine Lagarde comes in with something dovish, and potentially we get movement up like that. But it's going to be very volatile. So just be very, very careful around the ECB and the it would have been So Raj just asking when the FOMC was yesterday. It was around 9 p.m., 7 p.m. in the UK, 9 p.m. ZA, and then there was a press conference a half hour later, so 9:30 and 7:30 respectively. In terms of today, I just want to give you the times for the ECB and the Bank of England. Just be very, very careful around these particular times, okay? Because there's going to be some volatility. But if I think that ECB potentially follows on from the Fed, right? Let's just take a look at pound US dollar. I'll give you the times in a moment. Let's just bring up the cable pairing, and you can see cable here's the big push up. Okay, industrial production, wage inflation, all showing moderation in the UK. Raj, I'll speak to you tomorrow. Not tomorrow. There's no webinar tomorrow. We'll pick up again on Monday, and then we'll see if we can get some sort of kick up like this. Something that's that just suggests as follows. In terms of the ECB meeting today, that comes out at 3:15. So the main refinancing rate, the monetary policy statement from the ECB, that's at 3:15 ZA. So it'll be 1:15 UK. And then the ECB press conference will be a half hour after that at 3:45 p.m. ZA, 1:45 p.m. UK. The BOE is going to be earlier in the day. Okay, so the Bank of England, their official bank rate and statement come out at 2 p.m. ZA. That will be 12 p.m. UK. Okay, 2 p.m. and 12 p.m. Okay, I don't see any press conference that is accompanying that. So just be very, very cognizant of that. All right. Take a look at the Dow. I'm just going to go new all-time highs for the Dow. New all-time highs, but still critically overbought here, and that's going to be similar for DAX. Okay, so I think that there is going to be some bullish movement based off of yesterday's Fed announcement, but okay, we've got to just be cognizant of the fact that there is the ECB today. It's looking like we're having a tremendous run up here in the DAX, but gee, this is just getting very top heavy at the moment, super top heavy at the moment. So we're just going to have to keep an eye on it. We've been overbought now for about a week and a half, okay, and we've had some scandals. When it does hit, I think it's going to hit hard. Okay, when it hits, I think it's going to hit hard. So just be very careful about that. Okay, the last chart I want to take a look at today is gold, because gold to me has been looking quite bullish, but it has been pushed down a fair amount over the last week or so, and you can see here that I think the higher trough is coming in. I'm still going to keep the question mark because I need another candlestick to give me a bullish reference candle, but there certainly is a higher trough, higher peak. I just want to see if the next higher trough comes in. We're above the 30-week exponential moving average, and the 30-week exponential moving average pointing up. Go through the daily chart, and we've really kind of jumped, pushing back into zone one. Take a look at our RSI back above 50. So we're kind of getting back into zone one here. So I think this 2000 level still hugely significant. It's oscillating around it. It's moving above 2000, then it's dipping below, moving above, dipping below. So that 2000 is a level that the market's certainly taking note of. If we can get into zone 1 and get those Bollinger Bands to expand, then potentially there's going to be that bullish bias to gold, but we've got to watch the dollar. So if the real rate is coming down and that's pulling the dollar down, then I think there's going to be a tailwind behind gold. So this kind of pull down here was sort of a dip in the proverbial uptrend, the potential uptrend, let's say. So let's just take a look at this on the hourly chart. And again, just watch the greenback. If the greenback corrects, then there might be some sort of correction in gold, and then some sort of move up like that. But over here, I also want to keep an eye on the stochastic. And as long as the stochastic sort of stays in that upper quintile above 80, there is some nice support behind gold. 2000 still proving to be the key level here, is just oscillating around. But I do like this higher trough, higher peak. And now the next potential high trough coming in. All right, that's as far as we go this morning. There won't be any webinar tomorrow. There's a public holiday here, but we'll pick up again on Monday. We'll go for next week, and then we'll take a break for the following week. So just be aware of that. There is going to be some changes happening next year, but I'll let you know about those next week. I just want to get a little bit more information. All right. Let's wrap up here. Thanks, guys. Have a great day ahead. Good weekend. We'll chat Monday. Cheers, guys.